Assalamualaikum and hello everyone. Welcome to my channel. I'm Madam Lisa. Today we are going to discuss a topic receivables, which is under the standard IFRS 9 equivalent to the Malaysian standard and IFRS 9, and we're going to discuss a question from a final exam December 2019. We're going to discuss how do we approach the question and later how do we come out with the answer. Let's start. Okay, this is the question. Vita Enterprise sells women attire. The business is selling its product on cash and credit basis. The company closes its books on 31st of December each year. Below are the transactions pertaining to sale of goods for the months of March 2019. So on 1st of March, the order was received for one customer called Menawan Republic. And Menawan Republic is entitled to a 4% discount. The credit term agreed is 5/15 at 30. That refers to 15 days. If you pay within 15 days, you'll get a cash discount of 5%, and the remaining should be made in terms of payment in 30 days. 13 March, Menawan received the product. So this is the date that you will have to recognize the financial asset account receivable Menawan. Why? Because it was a goods that was sold on credit, right? And after detailed checking, Menawan returned some poor quality garments to glitter worth 2,500. So this is return inwards, or also known as sales return. So you should know what is a journal entry: debit, sales return, credit, account receivable Menawan. And then on 23rd of March, the company Menawan issued a check amounted 40,000 to our company. Our company here is reporting entity itself, Vita Enterprise. So when you receive the check, you need to debit your bank account, credit the account receivable Menawan. You need to check whether is that a full payment or not, because earlier the goods that were sold was 50,000 and some return were made after that. And then the last one is 25th of March, where you sold goods to another company, L Limited, and then accept a 90 days 8% notes from L Limited. So this is not about account receivable, but this is more on the second type of receivable, that is notes receivable. We have some information regarding computation of allowance for impairment of trade receivable. This may be relevant for us later, and this is the first time Vita Enterprise applies provision metrics in estimating impairment loss. So for your information, under IFRS 9 or IFRS 9, you have this method where you estimate the impairment loss using the expected credit loss allowance, and you use some provision that is to be looking at how much is the impairment loss. So we'll go into that later. These are the aging analysis of the receivable according to number of days past due, with the different credit loss rate for each group of receivable according to the number of days past due. So they don't have the same percentage apply for all receivables. So that was done accordingly. Okay, next. Vita Enterprise is expected some credit loss rate, which is based on historical credit loss experience and adjusted for forward-looking estimate. This is the provision or the thing mentioned under IFRS 9. Actually, we'll go into that later. The allowance for impairment as at the beginning of the year, which is the current year, the 2019, was 800. So this is the beginning balance that you will have to show in the movement of allowance should you be asked to prepare the disclosure notes. So required, you are asked to these three grouping characteristic that may be applied in estimating the impairment loss. So for under the IFRS 9 provision matrix requires entities trade receivable, you have to group your trade receivable based on certain shared credit risk characteristics. So you have to list down what are those grouping characteristics that may be applied in estimating the impairment loss. So let's look at what we have. So grouping characteristic of trade receivable that are applicable in estimating impairment loss. This was taken from the YouTube channel of Sylvia from CPD Box. So these are the things that were mentioned: retail versus business customer. You can use this to group things, put retail separately, business customer separately. Maybe you can group them by type of product, sometime by where they are located, by geographical region, by currency, maybe by foreign currency versus maybe local currency, by maybe euro, maybe by US dollar, or by Malaysian ringgit. By rating of the customer, the higher the risky, maybe the risk is, maybe the high is the expected credit loss, or maybe the dealer type. Yeah, basically that. So you can just list down, and any three of these will give you 3 marks. Next, we are asked to identify the maturity date of notes receivable L Limited. So earlier, I have already extracted that on 25th of March, you sold goods worth 8,500 to L Limited and accept 90 days. So there is a maturity period of 90 days, right? And you are asked to identify when is it the maturity date if the notes were accepted from L Limited on 25th of March. When is the maturity date? To do that, so you need to know that this is 90 day. 8% refers to the interest revenue that you will calculate on that note receivable, and 8,500 refers to the face value that was accepted on 25th of March. Because it has a term of 90 days, so the term in days must be listed first. You want to find the date or the maturity date. So since it was issued in March, there are only remaining 6 days in March. If you take 31 days in March minus 25 on the date you accept, and then there are still 84 days. We need to do this until it reaches the due date. And then April, there are 30 days in April, deduct with 30, so we have remaining 54. In May, 31 days, and you have 23. So meaning that in June 23rd is your maturity date, because you cannot be like, deducting another 30 days and you leave it as negative. No, you have to leave it as the date to be June 29. Okay, the question does not ask you to calculate maturity value. What happens if the question asks you to calculate maturity value? In case, I know the question only asks you to do this maturity date, but if you are asked to do maturity value, this is a bonus answer for you that you may go and check it out. How do you calculate? First, take the face value, then calculate the interest. How do you calculate the interest? Take the face value, multiply with the interest rate times the note term. So you go and get the interest first. It was 170. Then go calculate the face value plus the interest to get the maturity value. After you have done that, you will be able to get the maturity value, 8,500 here plus 170, 8670, in case that is asked, or if you are interested to know what is the maturity value. That was 8670. Next is part C of the question 3C. Glitter is still about the same company. Now you are asked to discuss whether Glitter Enterprise may derecognize. This is a trading company, so they derecognize Menawan Republic from its book. Okay, you can only derecognize if the contractual rights to the cash flow has expired, right, according to IFRS 9. Before you do that, let's just look at what was the information. You can check that. These are the information on Menawan Republic that you may have to take into consideration. Maybe you can do a little journal entry. So I've done the journal entry for 13th of March. Here should be 13th of March. Yeah, 13th of March here, right? 13th of March where you deliver the goods to Menawan. So debit account receivable Menawan, 48,000. Credit sales. This 96% is after you have deducted with 4% trade discount. So it is net of trade discount, 48,000. Next is on 7th of March. So there was some return inwards, right? Not on 7th of March, actually on 17th of March. So my column was rather small, so I just write it here. Okay, 17th of March. Sales return, debit, sales return, credit. So this should be credit here. Right, let me just correct this. This is just a typo, so it should be credit, AR Menawan. So just make some little correction there. Yeah, because let me just make it better for you. Okay. This supposedly should be credit account receivable Menawan. Next, I was to record the sales return or return invoice. Then if you look at 23rd of March, Menawan made a payment of 40,000. So at first it was 48, right? Then it was reduced by 2,500. Then it is reduced further by 40. So however, there is, if you check, there is still some balance. So let's see whether should you derecognize or not. According to MFRS 9, reporting entity shall derecognize the financial asset when and only when this situation, the first situation, at least it is being met. Contractual right to the cash flow from the financial asset, here is Menawan, has expired. Let us check on that. So if you look at the account receivable Menawan that I have already prepared here, the 3-column ledger, there is a balance of 5,500. So meaning that there are still remaining amount that are still not yet paid by Menawan. They only paid 40,000 out of the outstanding debts. So therefore, if you compare this, does it expire? That's the issue. The answer is no. Why no? Because there is still some remaining balance there. So you cannot go and derecognize. So that was already clear. The second one is if you transfer the right to collect the cash flow or the risk and reward to the another party. Here you don't do so. You can transfer to a bank. You can also transfer to that collector if you do not wish to collect it yourself, but you have to transfer all the right to collect and also risk and rewards to the transferee. But here it's not relevant. So we just based on situation A on 23rd of March. Based on A, account receivable Menawan only paid 40,000. This is the payment on the green font there. Yeah, if you can see the font. Yeah, this one, the green font here. And but the full amount due was 45,500. This is the amount due, 45,500, right after you deduct the retained invoice. Therefore, there is still a contractual right to the cash flow from financial asset account receivable. How much? 5,500. Because of that, you cannot derecognize account receivable Menawan from its books, from the books of Glitter Enterprise. Why? Because there is still an amount owing of how much? 5,005. That's at the date of 23rd of March. Why? Because they have not fully paid. So therefore, you will continue to recognize that as accounts receivable. Next one is regarding the allowance for impairment, which is question part 3D. You are asked to advise Glitter Enterprise. Earlier the information has been given, but I have just copied some of the information here, right? I advise Glitter Enterprise on the amount of impairment of receivable to be recognized as at 31st of December in the statement of profit or loss and also in the statement of financial position. So the company expected the credit loss based on the historical credit loss experience, and they also adjust that for forward-looking estimate. Let's make some revision of IFRS 9 or MFRS 9 regarding subsequent measurement of trade receivable, which is your financial asset. On subsequent measurement, normally what you do is you're going to go and make estimation of the expected credit loss. You're going to come with some rate of how much would be likely not collectible. You are not going to just give a lump sum percentage, but you will go and scrutinize the account receivable according to the grouping. Here is the grouping is according to the number of days past due, right? Based on the aging, actually, aging of receivable. And according to MFRS 9, yeah, the according to our syllabus here that we are following in our university, we are using simplified approach. For detail, you can refer to the textbook there. What is simplified approach? Is that where you use provision metrics. Remember I said that I'm going to explain that. Provision metric means you need to go and calculate the impairment loss based on your historical experience, based on your past history of the observed default that has been made by your customer, and try and look at the loss rate percentage, and then you go and apply that to the group of financial asset. That was the first thing that you do to come with the impairment loss or the expected credit loss percentage, which is based on historical default rate. So the figure given here is based on historical default rate because as mentioned in the question. Next. Second part is you need to go and compute the default rate, which is the step that you have here. Compute the default rate. Yeah, just go and delete this because I put that twice here. Let me just erase that first. Yep, let me just delete the part that I have written twice. Okay, so this shouldn't be here because I've already mind my erasing was not that, it is horrible, I know, but what matter is the content, not so much of this smudgy things that I've done. Never mind, done with that. Okay, let's go and continue. Step 2, historical default rate percentage will normally be updated from time to time and it will be adjusted years ahead to reflect the current and forecast. First, it is based on history, but later you need to go and look at the current situation and try to forecast, and therefore that is called forward-looking estimate. So what do? Is that we create another column next to our expected credit loss. In the question, you are only given 3 columns. Next to it, create 1 column and go and calculate what is the credit loss, loss allowance, right? You are given the expected credit loss. To calculate credit loss, the loss allowance, which is based on the expected credit loss multiplied with the outstanding receivable. So here it is 2%. So you take 2% multiplied by the receivable. We have 1284 here. You will repeat with the percentage given, yeah, up till this one. For the one that you have 100% percentage, do not include. Why is that so? Because this will give you an indicator that there is no way that you can collect the account or the amount receivable from this customer that has already been overdue by more than 90 days. So therefore this has to be written off as bad, meaning that whenever you have the default rate of 100%, this can be related to bad debts written off. But these are all things that still you have high hopes of being able to get. But here no more, meaning that confirmed uncollectible. So that's why there are no figure here. So after you have done that, you will get the loss allowance figure 2166. Okay, that loss allowance figure, where do we disclose that? So before we disclose that, remember we have one entry here on that I mentioned just now was bad debts, because there is no hope that you can collect, because 100% is a default, right? So you will debit your allowance for impairment 3,500, and you will credit account receivable 3,500. You write off the bad debt. Okay, next, let's look at the what we are going to do according to the requirement. So this is the journal entry that we did earlier, right? And now what we're going to do is going to prepare the movement of allowance, or the statement of allowance. You take the balance at the beginning of the year for the allowance for receivable, 800. Include the bad debts in the statement by deducting them. Then calculate the balance of allowance at the end of the year. So this 2166 is determined using our table earlier, 2166. Remember, much earlier we have calculated 2166. So that was the balance at the end of the year, or the one that you will have to deduct from your account receivable balance. You have to deduct that, right, later to get the net realizable value. But before that, let's just finish with this movement. Then you have to compare. You want to get what is the charge for the year here, right? So you will have to compare the total here, which is the running balance here, will be 2,700, which is a negative balance or an outflow, negative balance. You will compare this with the balance at the end of the year. That is based on the loss allowance, right? Based on the loss allowance that we have calculated earlier. Therefore, you will get an increase of 4866. An increase means the one that you will need to debit them in your statement of profit or loss, or your income statement. That increase will be put as your admin expenses, under your admin expenses. And this is the journal entry. You can also do this by doing this working that I've shared here, but I'm doing this by showing you the statement, right? Because this is required in the question for you to put this as your answer. So this is the answer, part of the answer. Next is to write an advice on the disclosure that or propose to the management that this is to be disclosed where in the SOPL. Make them understand that loss allowance of 4866 will be recognized in SOPL as expense. You don't have to show the SOPL, but I'm showing you. As I say, this is bonus answer, so that should be under admin expenses. Increase in loss allowance. If it's a decrease, it is under other income. And also talk about the net realizable value. The net realizable value will be 79,484. How do we get that? You take 81,650. 81,650 is 85,150. Where do we get 85,150? That is the total from your, I'm going back to my slide. Okay, from this total here, 85,150, the total amount of receivable, right? Okay, and that have not yet excluded this, right? So that's why we deduct. Okay, let's go back to the part that we stopped. We're almost done. Don't worry. You can rest after this. Sorry about that delay. I'm doing, but just bear with me. Okay, done with that. Yeah. So the disclosure there, presentation. This is the presentation. This is the disclosure notes. And this is the net realizable value that we derived earlier. And minus 2166, this is from here, which is from the loss allowance calculation through the table that we earlier added in our previous slide, right? So with that, you have 79,484. That's the end of this discussion for the question. And these are the the part that are needed, together with this explanation. But the statement that you have here for statement of financial position and statement of profit or loss are some bonus answer. But you may just provide this. But to understand this better, it's best that you show them workings. With that, I thank you for your time to do this question with me. I'll see you when I will see you. Yeah, remember, indeed Allah is with those who patiently endure. With that, I thank you. Assalamu alaikum. And I'll see you when I will see you.